All right, welcome back, ladies and gentlemen. My name is John. I got options. Today we're going to be talking about Stanley Druckenmiller and how he has sold his Sandisk position. Looks like he made a nice, cool 400% in, what was it, like 3 months? And now he's moving that money, or some of that money, over to Bloom Energy. That's his new position. At least that's what this article suggests. I haven't looked and checked myself to see what the numbers actually look like, but let's just take it for this article's word that this is what he's doing. And it makes total sense to me. Stanley Druckenmiller is a guy who likes to trade. He likes to be in, he likes to be out of positions, which is a little different from my style. My style is I like to be in and I like to stay in for the long run. So, Stanley Druckenmiller, he wrote an NVIDIA. I think he got like over a 10 bagger on NVIDIA in a relatively short time frame. And I guess he was in Sandisk, which makes sense. And he has really good guys under him that work for him that do all this research on AI and things like that. And they were able to spot the NVIDIA trend well before anybody else could see it coming. And so I think it's interesting that he's hopping in Bloom, especially considering how high Bloom stock is. I mean, I think they've already shot up like over 10x with all this AI stuff. And for Druckenmiller to be hopping in now is, that's something to think about. That's something to look at. Never, ever, ever buy a stock just because somebody else bought a stock. Never buy a stock because I mentioned it on here. Never buy a stock because some billionaire is buying it, okay? Even if they're one of the greatest traders of all time, like Stanley Druckenmiller. Always do your research, okay? All that means when they buy the stock is that you should go look at the stock. That's all it means. And then you should come up with your own decision, make up your own mind. So let me walk you through how I would make my decision looking at Bloom Energy and where they're trading at today. So one of the great websites I like to look at first is called Fast Graphs. And I'll put these little graphics up on here for you to pause and look at. But I look at Fast Graphs. You got to pay $16 a month or whatever it is to get access to this. Worth every dollar. Not a sponsor, I'm just saying, this is what I use. So I look up Bloom Energy, I hit forecast, okay, because we want to look in the future. The only thing that matters with companies is the future, okay? The past is the past. It's already happened. There's nothing you can gain from the past. The future of a company is going to tell you what is going to happen to the stock. All right, so I look at the earnings first. The earnings growth for this year, 147%. Next year, 70%. Year after that, 76%. That is incredible. So if you trade that at a one-time PEG ratio, right, then by the end of 2028, so picture you're now in December 2028, and you're trading at a one-time PEG ratio. So it's the PE divided by the G. The G is the growth. So you're at a 76 PE ratio and you're making $5.66. And this is 16 analysts that are putting out that price and coming to that. That's the average. Okay, so obviously all this is going to change. This might go way higher. This might go way lower. We don't know. But this is what the estimates are that we have to work with. So we're at 5.66 times 76. So you're at a $430 stock in December 2028. Okay? Now, if the next year after 2028, the expectations of the earnings is that it's going to collapse and go down 20-30%, which I don't think is going to happen, then obviously it's not going to be trading at a 76 PE ratio, because it's going to be trading on a forward PE ratio of the next year's earnings. So So all these are estimates. All these are guesses. All right, but we got to make as calculated and educated of a guess as we can, and we do that time and time again. And we pick companies that have crazy TAMs, are expected to explode, expected to grow, and you're gonna do pretty well. So back to what we were saying, we're at a $430 stock. It's December 2028. Today, Bloom Energy is trading at BE. Bloom Energy, $265. So you're all of 2027, all of 2028, and you're at a $430 stock. Now, let's go look at the option chain. Let's go as far out as we can. Right now, we got June 16th, 2028. So what I would do is I would go as high up as I can on the option chain, because we can literally only go to the 350, 360 strike price. And you can use feedmetrades.com to save these trades. All right, make an account, log in, go to the watch list, hit options, and add an option to your watch list. And you can watch these options. You can create the call debit spread on there and watch it, or at least track it. So you're gonna buy the 350 and sell the 360. Not you, but me. And that's gonna cost me $175. Let's say it cost me $200. So I'm gonna take $200 and it would turn into $1,000, assuming June 16, 2028, Bloom Energy is over 360. That's not a crazy ask, all right? We just went over a one peg ratio, and we were at $430 stocks by June. So 360 by June 2028, not crazy. I think this is kind of what Stanley Druckenmiller is looking at. I think this is what he's kind of thinking about when it comes to making a position on Bloom Energy. And here they are in the pre-market. Of course, they shot up 17%. Surges on Q1 guidance. See, I don't even know they had earnings. Fueling analyst price target hikes. Bloom Energy reported revenue $751 million, up 130% year over year. Raised full year guidance to 3.4 to 3.8 billion for revenue, and 1.85 to 2.25 in EPS. So why do I think Stanley Druckenmiller shifted from Sandisk to Bloom Energy? Both plays are on AI. Both plays are proxy plays to AI. And one, I think that Stanley Druckenmiller believes that Bloom Energy is going to have a much larger and longer run of growth versus someone like Sandisk. Okay, because Sandisk plays in the memory, and memory is very commoditized. The problem with memory right now is that there's not enough memory factories making the memory chips for AI currently. So what's going to happen, and right now that's creating a bottleneck where everyone's trying to go in, and this bottleneck is going to get solved probably in the next 2-3 years. And when that happens, you're going to have a bunch of factories making chips, memory chips for AI, and the demand, maybe the demand stays the same as it is right now, but if you increase the amount of supply, then the price you're charging for your chips goes back down to what it was before, which is a lower margin business. So right now, these companies, these memory chip companies, are making so much money, not because they're selling more chips, but because they've raised their price on their chips by an insane amount because there's so much demand. So they're going to use that money, and they're going to use it for CapEx. They're going to go build out more factories so they can make more chips. But obviously, as they do that, their margins are going to come down. Now, the bull argument for these memory companies is saying, no, the AI demand is not going to come down. The AI demand is going to keep going. It's going to keep accelerating. It's going to keep growing. And therefore, even as they build more factories, they're going to keep the high margins because they're going to have so much demand that they're going to be able to sell it. That's the bull argument. Not going to disagree. I don't know. We don't know what's going to happen. But the memory chip industry is notoriously very cyclical, up and down, up and down. So we'll see what happens there. But I think that Stanley Druckenmiller sees that, and he says, you know, the memory stuff, it's a bottleneck. That's why the stock shot up so much so fast. But it's not going to be a long-term bottleneck the way energy demand is going to be. See, energy demand is going to be a bottleneck for a long time. And what Bloom Energy does specifically to solve that problem is it lets these data centers power themselves as opposed to taking energy from the grid. So that's what Bloom Energy does. It makes the data center self-sufficient for energy, if I'm understanding it correctly. So before you were to make a position on Bloom Energy, right, you would need to go in and research Bloom Energy, and you need to learn everything and anything you can about Bloom Energy. Go watch YouTube videos, go on the website, go read articles, go listen to interviews of whoever you can from the company, dig more into the numbers. You need to increase your conviction so much. Why? Why do I stress that so importantly? It's because the higher your conviction rate, then the better your decisions will be when the stock moves, up or down, okay? Because when you don't have a lot of knowledge on a company, and you don't have a lot of conviction on a company, then when the stock moves down, you might make the wrong decision, okay? Because you don't want to buy or sell a company simply because it moves up and down. You want to create positions because you have very high conviction on a business. So then when the business moves against you, you are not scared out of your position, okay? You have to be willing to hold the position to see the position through. The only reason I buy and sell a position is because something has changed with the thesis. And you could argue that Stanley Druckenmiller saw something changing with the thesis, which is that, or he gained new knowledge about Bloom Energy, and his conviction became much higher on Bloom Energy versus Sandisk. And that's why he said, you know what, Sandisk went up, great, we're out. Bloom Energy, we're in. Okay, so that's just a quick little morning video I have for you guys. Want to share my thoughts on Bloom Energy, Stanley Druckenmiller. Shout out to Stanley Druckenmiller, you're the GOAT. And make sure you check out feedmetrades.com. I created that website so you could track all your option income trades, collecting premiums. You're selling calls, you're selling cash secured puts, you're doing calendar spreads, all that good stuff. Track that on feedmetrades.com. Your first 30 days are free. It's on me. And now you can also track you can create a watch list for options, not just the stocks, but also the options, where you can watch an option. You can create a multi-leg option. So you can put in a nice 4-legged option. You can put in an 8-legged option in there. I think that was 9. Put an 8-legged option in there, right? And you can track that. I'm crazy putting in an 8-leg. Crazy work. Anyways, that's what I got for you guys. Stay healthy, stay wealthy. Stay tuned for the next one. Peace.